Is Tesla going to be the next Nvidia? I would argue that Nvidia was the next Tesla. Remember, guys, we did a video recently about, is Palantir the next Nvidia? And the reason being is we got so many people getting excited about seeing Palantir go from $5.50 up to $25. Oh my God, this is the next Nvidia. It's going to go up even further. Everybody needs to calm down and relax. This is what I'm especially trying to promote on this channel. Don't follow the hype. Remember, my personal opinion is making the argument about Palantir being the next Nvidia, that made sense to me because if you saw, what you saw was a big increase in share price and then also running the coattails of this AI boom. Now for Tesla, I look at it going, a car manufacturer being like Nvidia, so a company that makes 18% gross margin, that means every unit they sell, they have about 18% of profit in there, versus Nvidia, which is about 80% gross margin. And you're at the very early stages of this new AI boom. Electric vehicles have been around for a while. Now, are they still growing like crazy? Absolutely. Here are some stats on this that I think are absolutely incredible. In 2018, EV accounted for 2% of car sales. In 2022, 14%. In 2023, 18%. So, big time growth here. Big time growth. Still a lot more growth to go. There are a lot of people who think EV are going to replace all cars. Maybe it's going to replace all combustion engine vehicles. I don't know. But I do know that this probably is going to grow. I have an electric vehicle. I love driving it. It's quiet. It's quick. It's fun. I totally get it. It's funny. The other day, my wife and I were driving and we were sitting in an intersection. And at that intersection, there were 4 Teslas, not even 4 EVs, 4 Teslas. Tesla sold what? 1.8 million, I don't know the exact number, cars last year, and growing. A company like Toyota sells 15 million cars a year. So there's a lot of potential for Tesla. But how is that different than Nvidia? That's what I want to show you guys. It's incredible because everybody wants to get the next Nvidia. Everybody's excited about it. And I understand that. You get emotional inside. You have FOMO. The stock is going like crazy. I want to get in on it. I can't miss out. I get it. We've all been there. We've all been there in one shape or another. We see stock fall. We get scared about it. We want out. And that's what I urge you to caution. Just 3 years ago, people were calling me crazy and I said Tesla, I've been saying Tesla's overvalued for a long time. But people literally looked at Tesla as this company can't miss. Tesla since then, for the last 3 years, it has gone from a high of 414 to now we're at 184. Up today quite a bit. But it got as low as $100 and some back in January of 2023 or so, a little over a year ago. That's a big fall. As opposed to Nvidia, we pull up Nvidia before its big run up. Where was it? Yes, it hit a high here of $346 back in November of 2021. So that's a nice high. But then look how much it fell. 108. 109. I think it got 108 was the low back in October of 2022. 108. So it had a big fall, which is very similar to Tesla. But then look at this skyrocket and what's happened since then in terms of their revenue. Well, let's go to quarterly. 2021, $7 billion versus $22 billion. They've 3x their revenue in that time. So the question you have to ask yourself is, and with really high gross margins, look at these gross margins, 72% in the last year, but in the recent quarter, I think they hit 76 to 78%, as opposed to Tesla at 18%. Now, could it still be the next Nvidia? Sure. But I look at this thinking to myself, what would make this really skyrocket? Well, usually companies really skyrocket when they start out undervalued. Is Tesla undervalued? We'll get into that in a little bit. Was Nvidia undervalued? I don't remember. I wasn't looking at Nvidia back then. Maybe I should have been. But nobody would have seen this big run up in revenue from $7 billion to $22 billion in a quarter. Look at this. They did $61 billion in the last year, but they did $22 billion last quarter. This thing is absolutely hockey sticking on its revenue. The question is that sustainable? I don't know. But I will say the business they're in is chips. It's not like Tesla, which I love about Tesla. The big benefit of Tesla is they were essentially the first electric vehicle company. And they dominate, guys. They absolutely dominate. I look at, if you said to me right now, name me a electric vehicle company, you ask 100 people, Family Feud style, 100 people ask, name me an electric vehicle company. What percent are going to say Tesla? An overwhelming percentage. Look how many went under. Nikola, Rivion's hanging on for dear life. Workhorse, all these companies. By the way, Lucid, I think, is a better looking car than a Tesla, but it starts at like $75,000 and goes up from there. If you recall, Tesla used to be expensive, but remember, I used to always say in videos 3 years ago, guys, for Tesla to be the #1 car manufacturer in the world, they can't sell $100,000 vehicles. They've got to come in with lower priced vehicles. You've seen how many price cuts since then. That's part of the issue about saying, is Tesla going to be the next Nvidia? Nvidia is raising its prices on things. There's so much demand for them, they can raise their price and increase their gross margin. Their gross margin wasn't in the 70s before. It was not in the 70s before. In fact, let's go look at where it was. Let's go to our income statement. Back here, gross profit, $4.6 billion on $7.1 billion. It was close, but it was about 60% here, right? A little over 60%. Okay. Now you might sit there and say, well, it's pretty close. Guys, the difference between 63, 65% and 75 to 80 is a huge difference. That's a big jump for companies. Tesla has seen declining gross margin. If you're watching this, you're probably trying to find the next big company. I would argue to you, don't try to find the next big company. Try to find great companies at great prices. Because in order to find the companies that are going to skyrocket like this, are you able to sit there and see a company go from 300 some down to 100 some? That's a tough pill to swallow. Now, the more you understand about fundamentals, the more you find a process that works for you, you can stomach this. But it takes a lot of hard work to sit there. I love it how people on the internet would have said, if I had sat there and said, Nvidia is a great buy right here, and it went lower, there'd be people on the internet saying, oh, look how stupid you were, and then watching it skyrocket. Remember, buying companies based on fundamentals is how you start. But how do you find the companies that can go like this? You hold your emotions in check. You do nothing. That's the hard part about investing. As Peter Lynch says, everyone has the brain power to invest, but very few people have the stomach to invest. What he means by that is, to see a company go up and up and up and up, you've got to be able to be careful. You have to be able to be patient when the company falls by 50 or 60%. Charlie Munger and Warren Buffett always talk about how in the time they've owned Berkshire, it's fallen 50% or more 3 or 4 times. Can you sit there and stomach that? That's what's hard about investing. That is 90% of investing, is sitting there and saying, the stock is going against what I believe the company to be. The stock is going against the fundamentals. The example I always give was 2011 and 12 when I was buying Microsoft between $17 and $22 a share, and a tech CEO told me how wrong I was because Microsoft's a dead company. And I said to him, like, but they've been growing their revenue 7 or 8% a year and profit 11%. I don't care, is what he said. I don't care. He wouldn't take the company for free with $50 billion essentially in the bank account. He didn't care. That's the kind of thing you have to sit there and say, this guy's a tech guy and I'm an investor. Who's more right? Well, turns out I was right. Now, in fairness to me, I sold at 60 saying, it's too overpriced. Big mistake. Big mistake. That's one of the biggest mistakes I've made financially, is by sitting there and saying, man, I could have had 20 or 30 times my money at that point. That's a pretty big difference. Now, with investing like Tesla and Nvidia, if you really believe Nvidia is going to change the world, it could very well do it. But then I sit there and say, okay, but you're at 37 times price to sales ratio. Let's look at Tesla. Is Tesla the next Nvidia? Well, it could be, but look at this. Tesla's price to sales ratio is 6.8. The average car company is 0.5 to 1. Now, I probably just triggered a bunch of people in this video, and they sat there and said, well, wait a second, Paul, Tesla's not a car company. That's what I'm talking about with the emotion of things. All the numbers show that Tesla is still a car company. And the emotional part of investing is being able to sit there and say, what is this company? What am I buying? And if I like it at this price, if it falls in half and the fundamentals get better, do I like it more? At $414 a share, guys, this company did 50-some billion dollars in revenue. At $184 per share, it's at $95 billion in revenue. Shouldn't you love it more here? That's what makes investing hard. Handling those emotions, being alone, the world telling you you're wrong. You have to be different to be a successful investor. You have to be patient. So if you want to get better at that, if you want to make less emotional decisions, this is where our community is so useful. click the link below, join our community. If you join the community, you get all the tools to make fundamental decisions, but more importantly, you get the community of thousands of like-minded investors that'll help you make better investing decisions based on emotion. And if you're able to do that well, you are likely to do very well in investing. So click the link below, $7 for 7 days. We have a limited number of spots. We have a wait list starting. Every day we start the day with a certain number of spots. Once they fill, you go to the wait list. But don't worry, even if the day is full, there are ways to fast track yourself into getting higher on the wait list. So go sign up now before the spots fill. They tend to fill by early afternoon, so go do it now. So what would it take for Tesla to become the next Nvidia? Well, probably a major increase in its revenue and profit. Well, what would that take? And the problem with car companies is they're very capital intensive. To build 1 million more cars, you don't just go flip a switch. You got to build factories. Especially if they got to build battery factories. They got to build car. There's so much involved. Obviously, we have no idea where Tesla is going. We have no idea where Nvidia stock is going. My thesis in life is if I can buy a great company at a great price, the rest will take care of itself. It's a lot easier said than done. It's simple, but not easy. With Tesla, let's go look at what we think the real value for Tesla is. I'm going to pull up the last time I did Tesla in our stock analyzer tool. I did some major revenue growth. And I even accounted, in terms of profit, I even accounted for some of the software part of the business that's out there. Remember, guys, there is a software component to this business, but it's not a software company yet. Just like the number one prospect in high school for baseball isn't a pro athlete yet. You cannot call them a pro athlete yet. The number one player in college, basketball or football, is not a pro athlete yet. Do they have potential? Yes. But we've seen how many times things have not lived up to potential. 3 years ago, the ridicule I took for saying that Tesla, people literally sat there and said, if I could buy one company and hold it forever, it'd be Tesla. I guarantee the people who said that probably don't own Tesla today. Why? Because those are the same people who based it on what the price did. Now the price has gone down 60%. I guarantee they've bailed. I don't want you to be that investor. I want you to be the true investor, which is somebody who makes their decisions based on fundamentals and then keeps or makes more decisions based on a combination of emotion and fundamentals. That's what's most important. So for Tesla here, can they do big time profit margin? Yeah, absolutely. This is high for a car company. Can they do even higher? Let's go even higher. Let's say you make the assumption that their profit margins would be 10, 15, and 20. Same with free cash flow. Great. PE of 15, 20, and 25, and a market value of 9% across the board. So remember, no margin of safety in here on my desired return. Just sitting there saying, what's the intrinsic value? What's the value of the company just making that 9 or 10% return that the market does? Let's see. Guys, 56 on the low side, 347 on the high, 150 in the middle. I don't know. For me, and these are my assumptions. Remember, Professor Oswald thinks the company's worth 180. So, guys, this is my opinion on it. I don't think Tesla will be the next Nvidia. I could be wrong. Don't forget to sign up for the community and tell me how wrong I am. Thank you for your time.